I am not a financial advisor. These videos are all meant for educational purposes only. All Complete Trader Academy videos are my personal opinion and perspective. Trading carries a high level of risk, and all results are your own responsibility. Please always demo first. Hey everybody, welcome back to CTR Review. Today is August 26th, Monday, 2024. Hope you had a good day, a good weekend too. So try to jump right into it here. So today could be a challenging day because obviously Monday, we don't know what direction the market's going to go. We have been now dealing with this scenario of taking out this high, and are we going to come back down for these equal lows and across overseas situations going on and blah blah blah. But when we talked about this here, we talked about coming up here. This was on the 15th of August, coming up here and then kind of hitting a resistance, so to speak, getting into that gap that's there, and then coming down for those equal lows, right? So when I talk about specifically Monday being, or not Monday, when I made the video Friday talking about we're still bullish, that's still it is still the case until further notice, right? So what does that mean to you? That means that you should not be in a rush. You should be waiting for price action to show its hand. If you take a look here at the bodies here, look at the bodies right here. Look at the bodies. Look at the bodies up here. And equal level with here. So in that sense, it's bullishness is working for you. What's on the bottom side? Well, we discussed that we didn't take out that liquidity. Remember we drew this liquidity here. I think I drew this liquidity last week on the day it happened, really on Monday of last week, or Tuesday the latest, because then I drew this liquidity, right? So what did we do? We rushed down, and then we never took out that pool right there, right? So we had that low, okay? So that's the whole mindset is where's price likely to go on Monday? Generally speaking, I would say always down. Why? Because when it opens, you do get a gap, and number two, you get the wick. Even if for the last 100 years we've been bullish, and you see constantly bullish weeks. What does that mean? Well, I mean, if you look at the weekly chart up here, if the majority of the weeks are bullish, what do you get? You get the wick of the week, which is generally set on Monday to Tuesday, sometimes Wednesday, right? So as today being Monday, right, and you having this pool here, that should already kind of open up your eyes and say, this is probably where we're going, right? Number one. Number two, if we wait for order flow to show us their hand, that's going to be obviously optimal. So let's see what that looks like. Let's take a look at that. So the 15-minute chart here, you can see when we started making these drives up. Well, we opened up. Let's just go from the beginning. We opened up, right? We opened up, we gapped up, and we came down below. Then we came back above. We took out the high. No, actually, no, we didn't. I'm sorry, we didn't take out the high. It was very close though. All right, and then we retraced, and then we took out the high, right? So we took out those equal highs right there, and look how far. Look where the price is. Like so, okay. As far as what kind of trader you're going to be, or what do we teach here? I'm always generally, my model is catching the expansion or the portion of the daily candle, right? If it's a shakeout day, which is a speaker and reverting to the mean and doesn't really go too much anywhere, then my goals are to take out liquidity and then retrace the opposite way, or vice versa, whichever direction it's going, and then maybe hold possibly if it does break out, right? Because some consolidations will look like a speaker, and then or consolidate and then turn around and go and expand, right? In this case, this is accumulation, as you can see it, accumulation, and it's not going far. When we even when we reach these lows or highs, like it's not far. Like they're pretty nice sizes. They're like 100 points up, down. But the point is that even when we broke above these highs, we're not going far. So then you get this candle here at 6:30. This 6:30. Look at that candle. Look at that. That candle is strong, right? That candle is nothing but bearishness, and it's quick. So what does this tell me? When I look at the chart, right? To me, I started at 10:30 today. Let me move this. Sorry, I'm all the way over here. When I'm ready at 10:30 today, and for this reason. Not only because and first, and the last thing I'll also say is it's August. I've been telling everyone this whole month that you want to tread lightly, especially the last week of August, especially. All right. So, which is exactly where we are. But that all being said, when I see that this takes out liquidity here, those equal highs right there, and then you see this big bearish candle right here, to me that's already suspect. Number one. Number two, I understand what we just talked about, which is this liquidity, especially here. Especially here. Forget here. I don't know if this is going to happen. It kind of looks like it's going to happen, but we don't know. But here, which is Monday's lows of last week, and that low, which would be Thursday's low, and then Friday's low. Look at that. So let me go back to this. So when you see this big bearish candle on the 15-minute, right? 6:30 shoots down. Now we're underneath the opening gap, right? So look at the structure. Look at the structure of this right here. You get this low, and then you get this high, and then you get this low, and then you get the candle here, this 845 candle that just, it's bullish, the blue candle, it just stops in its tracks, and it's underneath the opening gap. Now let me zoom in here because I know there's a lot going on here. I'll try to make this simple. Take a look here. So here you get this low, you get this high, you get this low. Excuse me. I am feeling better, by the way. I can finally not sneeze consecutively. So we're bouncing in between this gap, which is that main gap that we've been bouncing off of, that August. It's not from August 1st. It's from July 21st. All right, we've been bouncing up and down from that. Bouncing on top of it, going below it, going above it. So obviously, you know, the market's attracted to this level. Let's also put it that way, because it's very key to know that what do we have below? Well, okay, so the opening gap, we have the lower gap, and what's below that is the gap below here. Now, why is this gap also very key? You can see on the 15-minute very clear. You have Friday's opening gap is sitting inside that gap. So what does that say? And what write this for your notes. What does that mean? That means that it is a very high confluence level, meaning the price is going to be consistently drawing to that level because of the two gaps sitting inside it. So, and I'm saying all that to frame the rest of where I'm going to go with this. But as you see that we're bouncing up here, what order flow do you have here at 9:30? 9:30 pops up right there, right? 9:30 opens right there. What order flow do you already have? Look to the left of your chart. Forget all this to the left. Just look here. What order flow do you already have? Well, you have lower lows and lower highs, right? So when 9:30 pops up or opens, what do? We open up and we pretty much sweep that low. That low, right? These lows right here, which is fine. And if you took this buy here, I'm not mad at you. Right here, see this buy right here? If you took this buy and it swept and you swept and you bounced on this daily, this weekly imbalance right here, that's fine. I'm sorry, the gap, not balance. Well, okay, and you took the price and you shot it up because you saw the opening range gap right here, and the price shot up right here. Retrace back, okay? And if let's just say you're still holding it, or you get in right here. All right, let's just say you get in right here, even into this 932 imbalance candle. You include the gap as well, and then sure enough, it makes another drive. Now, this doesn't show candles. This just shows wicks. So it is showing that it's not really accumulating. It's creating liquidity points, right? Because it's not really accumulating. But what do? We push up right here, and take a look here. Look at if I was to show you 50% of this gap, not gap, the wick. Where are you? Yeah, and see that. So if you're paying attention, which I understand, not easy. When you're paying attention, you see that perfect level get hit like that, and then you get a retracement back. That's not a good sign. Let's put it that way. Number one. Number two, understand where the daily candlestick is. If you don't have a lot of screens, then I understand how this would be a little more difficult to see. But take a look here. I'm zooming in on this daily. What's the 50% of this wick right here? Let's do of the Friday. Of Friday's wick. Let's take a look at this. Okay. Yeah. All right. So it's Friday's wick. Because if you can see that we as a peak here, right? You see the peaks. You can see it's forming, but as a possible, we're talking about today. That's what this big level is. Can you notice that this price action that does look like equal highs, and that is the next objective, which I completely understand. Okay, this is why you want to stay away from the opening, of course, of the market. When you see this, it's being held by that that wick, which is the previous day wick. Take a look. It's sitting at 50% and it rejects hard. So that's already another reason why we are most likely going to come down. Okay, and this video is to learn. It's to, because we're going to be in this situation again. You're going to remember this, and it's very key. So I'm going to delete this. What also do we have here? Let's look at what's this over here? Oh, interesting. We have that same imbalance that the price is sitting in. Let me try to zoom in a little bit. That's from Thursday. I've been talking about this level for a while. On the 1 hour, it looks like this. Right there. Remember this? Remember we discussed this, and I dragged it out on purpose because, as you can see, we're respecting that level. Look at this. Look at the equal highs that we had today. They are literally tapping that level. Okay. So guess what? Look at the bodies. Look what happens. This is a 1 hour chart. Look what happens at 4, 5, and 6 o'clock in the morning. We can't even get past that. So what does that mean also? It means when we came below it. It's not like I woke up and then I saw this price action above it, right? It's not like we got above it and we used it as support in any fashion, right? Like it couldn't even make it past that, right? So that being all said, this is also, and when you look at this, it's like, okay, that looks a little too smooth right here. Right, all this liquidity built. I'm not going to draw it, but you can see that. And then remember, this was key here. This level's right here, right? So now that we've discussed all that, let me go back here and then talk about here, because if to solve the problem, even if I had nothing else on the chart to the left of the chart, and I just had this one screen, this is what we're gonna do. We're gonna do this. If I just had this, okay, right here, just this alone. Well, take a look at the bodies here, bouncing. Okay, cool. Oh yeah, nice move. We're going. Oh no, it's coming back. Oh, it's coming back. Oh, it came back low. Okay. Oh, well, we're probably still good, but in my eyes, this is too deep. It's not going. If it's trending up, you would be seeing another high from here. Okay, but guess what? Oh, fucking broke. It came back down and took me out. I can't believe it. Right here is the most obvious level to tell you that we're selling. Why? Because I'm not looking at this as 3 drives down. I'm understanding again, I know that there's liquidity to the left, but let's just say I didn't even know that. Okay, fine. I have this gap that I'm in. I got the quadrants showing, and I have this gap right here, right? But if I'm following order flow, take a look. I got a low, and I got a new low right here. And then guess what? Now the price action is sitting underneath this basic support resistance. Take a look. Take a look. Even if I drew this all the way out, you have to remember where you are. The problem with trying to be a contrarian or someone that knows that the market is manipulated. Well, where it bites you in the ass is you get too complicated and you try to trade the other directions. But if you take a look at this, these were lows, lows, lows. If that was a support, that got fucking broken, right? Because we have now another low. Where does that form? Let's zoom into this. Fuck the rest of the day. This is what's really key. See this? Take a look at this. So this 944 candle does not break that 931 candle. Okay, so right now, as we know, this is a sweep at 931. We sweep and we take off, but we stop and then we break lower again. This 944 does not break that low, but then the 945, look at this, 945 sits in that little gap right there, by the way. We have sealed the opening range. And if you take a look at these last two up candles right here, all right, well, just preferably the last two candles, even though this has a higher body, but you can see that that's already been mitigated here, right? And then you also have that gap right there with this 943 popping up. This is letting you know, like, hey, we're coming down. But let's just say you didn't even see all that, and you get taken out right here. Okay, so now guess what? We have yes, I have the quadrant level, but I'm not looking at it to bounce from it. I'm looking at it as I'm using it as algorithmic delivery for the coming down for everything we've already discussed prior. Plus, when we break this low, and you're probably like, dude, just draw it. I'm gonna draw it right there. I don't want this red. I want it black. Okay. Pretty obvious, right? Just showing you this red line here. Okay, as you see though, this is the 945. We have a new low right here. Okay, plus these lows here. And sure enough, what do? We come down to the 50. We come down. We're playing around in the 50 area. All right, we come right back up. Look how we tag that low. What else are we tagging? We're also tagging, I'm going to delete this. What else are we tagging? We're tagging this 944 control of price. This candle becomes a control of price. Why? Because it never breaks above that high, first of all. And then take a look here. You see we're tagging in it. We're tagging in it right here with this 952 and 953. All right, so then what does it do? Makes another low. You got confirmed direction. You got confirmed direction here. I'm going to zoom out and just say this is all I had. All right. You got confirmed direction with this, what I say, this 954. But guess what? Once we come below it and now we come back in, look at look at these two up candles. These candles now also become the next control of price. Right. Because they're the highest up candles in this price action between low and high. And that's another low. I don't have to, you can see the order flow, right? I don't have to draw this. But we're so interested in trying to catch the bottom that we're forgetting the basic price action. Right? And then shit, even down here. I'm just going to leave that right there. Oh, shit. Okay, I know you probably don't need to see this. It's very common sense. But at the same time, let the order flow show. This is why I wait for the market to open, especially on a Monday. Now, have I caught these lows and caught up and reversed here? And, okay, cool. All right, but if I was to make this easy for you, and this is not just for today, this is every day of your trading career. I promise you, if you stick to this understanding and rule, let's just say you caught this trade and you lost. Well, if you're wrong, and we try to be like the best traders we can be, right? Precision, all that, understanding, analysis. If you're wrong, then 9 out of 10 times it's going the other way. I'm gonna put it like that. Like now, now have I caught lows like this and then caught the third one or whatever, and then it go to my direction? Yes. But where would that trade be located? It would be located below in a discount area in a buy low and sell high situation. Let me bring this back real quick, right? Like let me delete this. Like I'm not looking at the three drives here while it's considered so high in price action. Number one. Number two, I understand the schematics here, which is forget the liquidity here. We have this imbalance here on this 115 from Friday. I have that lows just sitting inside it. I have 50% of this gap that we are discussing, and which would be sitting right here. And you have liquidity below this level. So even if that was a higher high and a higher low, and you never made a higher high, so this should automatically change the flow. Number one. Number two, you should see how violent these other bearish candles are. How many bullish candles, if I was to do this, how many bullish candles are in this zone right here? How many bullish candles do you see? You literally see 3, 4, right? There's only one up candle here. There's 2 up candles here. There's 1 up candle there, right? So with this, you just got to be paying attention to this lower time frame order flow. It'll save you everything. So anyways, we come to the 25%. We come back to these last 2 up candles. You can see it. I got it dragged out. Comes below the gap. Comes right back into 50. This right here is the fucking most beautiful trade right here. If you didn't catch it here and understood you went below it, and if you didn't catch it coming back up into this candle, once you saw price action come and hit this literal open of the 951, and you see it smacking on the 50 with order flow plus the potential on the downside, it's over with. Like this right here is just like screaming, yo, this is the best trade right here, right? So anyways, that being the case, damn, I'm already at 22 minutes. But remember, I don't give a fuck about all this other shit. Remember, if you took a loss here and you see it come underneath and bump and another low and a low high, boom, those are your trades. You don't have to look at it like, oh, I'm not getting a good risk to reward. Where's my target? You got plenty of targets down here. Plenty, right? So let me try to move fast forward. Then again, this candle 912 pops up, last highest up candle right there. You get 2 of them next to each other. We break below it twice. We come underneath, and this candle's getting referenced later. Let me kind of squinch out. Let's see if I can do that, and you'll see that I'm marking this level because we come in, we tag it, and then look how this is the next control of price. So what do? We shoot all the way down. We come down, we wipe out that liquidity with those equal lows I was talking about. We bounce all the way up. Nice oversold right there. We bounce all the way up. We get into this gap that's sitting there with, remember, this gap is so key. This is why we nailed it 1, 2, 3 times. We came into that gap 3 times. And you see that we come to the gap here. We're respecting this up candle right here. This was dirty right here. Look what they did here. So they came up and then they came below, respected that 50%, came down, wiped out pretty much a lot of the late buyers here. Then what does it do? It comes right back up and wipes out that liquidity. Comes and wipes out that liquidity. You think this is a double bottom, but remember, this is a strong level. This is a very strong level. And we're already algorithmically underneath it. Like we've already shown that we're using it as a resistance, but you're going to have raids. And sure enough, the price comes up and then it tags that control of price candle. Again, it's 10-12. That's why it's minutely moving any higher than that. But you are also in the 10-25 candle as well, right? So, just damn near about 50% of it, but whatever. So what does it do? Then it shoots down all the way and wipes out a majority of the rest of the buyers plus this liquidity that they built. And then what do? They bring it all the way back to the gap. And at 50%, you can see here that it pretty much respected and then didn't go any farther, and then now is coming down. So in my opinion, I think we're still rushing for this low here. And this here's the thing with this gap here. This is I had changed this imbalance from the 4-hour to the 1 hour to the daily, only because of the fact that it's a very high chance that we come and come and mitigate this imbalance, and then take out that liquidity, which would be now that low, which is from Friday's low. You see that? So with this price action here, take a look at it. It's bunched up. It's very tight. We haven't broke above. There's no dump and pump. Yeah, we had a dump and a very slight pump, right? But you could see that it's being held. I mean, again, even though I know we're bullish, I cannot fight the trend. Just because I can see both sides of the market doesn't mean I'm not a good analyst. Analyst. So you get what I'm saying? Like, you have to be flexible. And hey, I mean, if I'm telling you we're bullish last week, and I still gave you ideas like this, I mean, this is flexibility. This is not infancy. It's very key for you to know the difference, because again, if I understood this order flow scenario, well, what did I just do? Oh boy, I don't even know what I just did. Anyways, this order flow is key. You don't keep buying these. You just immediately say, I'm wrong, we're going the other way. I mean, I'm not trying to tell you to do that as a model or anything, but I'm just saying, like, that's very, very key to understand, that most of your trades or your days will be completely different and easier. So this is an accumulation, the manipulation, also the manipulation, which is that 9:30, that manipulation. Here's your distribution, which is coming at 10 o'clock. So that's what my model is, AMD, and I try to use projections. If you take a look at the high to that swing low, and if you take a look here, we get to the 1 to 1.5 standard deviation plus, and the 2 to 2.5. You can see that at the 2 to 2.5, we do get a nice retracement. Or is it a possible reversal? And this is where you would generally hold your trade to. You don't have to. I mean, obviously the 1 to the 1.5 is this gap alone was good. The liquidity, pick your poison, is totally up to you. But I just don't think we're done with the bottom side right now, especially with these equal lows very, very close to each other like that. I mean, I don't know. I mean, they've been pretty dirty. They've been pretty dirty lately, and again, it's the end of the month, so I really don't care, dude. But that being said, I know we had some nice divergence work here. Shit, I didn't mean to make it this long. So I'm going to go to a 30-minute here, and as you can see here, the solidifying of what we discussed today. We have the lower highs here on on NAS. We had lower highs here on NAS. We have higher highs here for S&P and Dow, and and then from here, which is that 630, which is that candle, that bearish candle I talked about. As you can see, from here to 930, we had lower highs here with 930, and then we had upper highs here with S&P and Dow. So, and S&P and Dow. So when you had that right there, that was another confirmation of pushing it down. Now, when we got here, yes, we had a divergence here. We had lower lows here. We had higher lows here. And then that did push the price up nicely, right? And then we had this low, which we thought as equal lows. We had higher lows here, and it pushed it up nicely back when we had lower lows back again. Now, who is in control here? Is it here or is it here? So I don't know, obviously, but I mean, I would definitely say tomorrow's Asia is going to be very key in London. Watch out. Do we sweep that low and then have a nice reaction? If we have a nice reaction back, then I would say we're kind of going back up. But this is their last resort right here. Like, if you see right here, when we came down here and then we came back up here, this is a balanced price range, just like any of these U's that you see here, right? Kind of like a double bottom, for example. But when we got price offering down and up, when we have this liquidity, that's why this level might not get hit, but it is a daily imbalance. If we don't come in and slightly tap, or if we refine back into, see this, I'm not even going to draw it. You know what? I am going to draw it. It's already there. This level here. I am, if we're bullish, or if you're wanting to be bullish, I do not want to see price come any lower than here. If it hits the 50, and I mean, it'd have to be like bing, it'd have to bounce off. If you come below this shit, I'm letting you know right now, if it comes below this, then we're obviously going to be in the protocol of what we discussed here, of, being bearish for a while and coming for those lows. And we're still down here. So look at that. Look at this price action right here. Like, it's super nasty, but it looks like this is a resistance. It looks like this is going to roll right over and slither down. But this is where we're at. I don't know what else I could tell you. And then if you take a look at dollar, dollar did take out that low already. Came a little bit lower again. And then kind of retrace back. We don't know where we're going to go from here. And then let's take a look at Dow. Look at Dow. Fuck. Took out that high again. That was another reason kind of why we kind of pushed down. But I mean, this doesn't show me that it's bearish. That's for sure. Unless they were really dirty and they wanted to get these last people in here that before it took off. God damn, that looks crazy. And then let's look at S&P. Also, I mean, are we double topping? I mean, but I just feel like they would have rather upset the market for real and go up another leg, and then by September, we get some rate. They talk about some type of rate cut. We shoot off for a little bit more, and then and then we kind of come back down and we sweep this down. I mean, that's what I was kind of thinking this whole time, but this price action is very, very, very suspect, man. It is giving me the 2022 vibes for sure, but for it to retrace here, you see a nice speaker forming on S&P. So manipulation, generally speaking, when you see it at a consolidation, but I mean, I don't know, man. I would still expect it to keep going up. But there is some nice retracements that it can happen, higher low, to make a higher low and bounce up, and that's kind of what I'm kind of going with this as far as NQ goes. But again, it can't really be any farther than this, if it makes it at all. I mean, again, it might not even make it at all. It might not make it to this low here. Like, it might depending on Asia and London. So I know I've talked you guys' ear off. So and then that was a nice pullback on NQ. I mean, not NQ, on Nvidia. Still shows me bullish, but at the same time, is this a special time in history where, because I think when we crash, like, it's gonna be bad. I think it's gonna be nasty. But I just feel like they're just not ready to do it yet. But the news this week should be interesting. You guys take care and God bless.